Hey friends, Dave here. Thanks for tuning into the channel. Today I want to talk to you about a new stock that I haven't mentioned before. This is in the space industry as well. It's an area of the market I'm very interested lately. Seems like it's growing very quickly. This company in particular is called Terran Orbital, ticker symbol LLAP. A few guys in the Discord have mentioned it a few times and it seemed like something I should maybe look into. So this is just a first high-level look at the company and what they do. I haven't made any investments in the company yet. I'll be sure to let you guys know if I do. Any companies I talk about in my videos, I will always tell you guys if I'm buying or selling. I just think it's important to be transparent like that. So yeah, for this, we're just doing some initial high-level research on the company, have not invested yet. As for what they do, they are basically a satellite manufacturer, but they actually have a video on their website that I think will explain it a little better than I can. So I just like to watch a quick video about them with you together, just going over what they do.
Thanks to pioneering university students and staff, a new era began to bring human ingenuity to space. With the first affordable and capable small satellite concept, the CubeSat, these engineers developed a new blueprint for space innovation and affordable access. From these creators emerged the Terran Orbital family of companies and the Terran Orbital Satellite Solutions entity, Tyvak Nano-Satellite Systems. With Tyvak, Terran Orbital commercialized CubeSat technology and is the gold standard for small satellites and subsystems. Terran Orbital is an end-to-end service provider for small satellite manufacturing, launch, and operations. Unparalleled success led the Tyvak team to expand beyond the CubeSat size and to begin producing larger vehicles. This remarkable decade-long journey with Tyvak is one of providing innovative, cost-effective solutions to missions that were previously unthinkable by small satellites.
Just a quick pause here, guys, to point out some of these missions are pretty high profile. We've got NASA moon missions. They were involved in the Capstone mission. Yeah, a lot of stuff for NASA and in some pretty big contracts here, working with Lockheed Martin, a very well-established player in the industry.
Satellites. Terran Orbital's satellite solutions have expanded what is possible to achieve in space. From success in delivering satellite solutions with Tyvak, Terran Orbital expanded its family in 2019, introducing its Earth Observation Solutions entity, Predasar. Save lives. In perilous situations where life and valuable resources are on the line, the need for real-time data and visibility is critical. Unfortunately, there are no existing solutions to adequately meet these demands. Physical access to these areas from aircraft is often impossible. Traditional satellites can take days or weeks to get clear pictures from space, limited to daylight and perfect weather.
That is a big limitation, by the way. One of the big things around getting a perfect orbit is you want your satellite to be able to view a certain area of the Earth at a certain time of day when there's daylight, because you can't see anything at night with these optical satellites. So being able to see using radar and seeing through the weather, seeing through smoke, and seeing at night is potentially a big advantage, in my opinion.
Answers are needed quickly. There needs to be a different solution. That's where Predasar comes in. Terran Orbital is deploying the world's largest fleet of radar satellites, traveling around the Earth closely and quickly in low Earth orbit. The Predasar line of satellites use a technology called synthetic aperture radar, or SAR, to see anywhere on Earth in minutes. SAR is a technology that uses radar to transmit radio waves to Earth and listens for those waves to bounce back. Predasar satellites then uses SAR technology to form those waves into pictures, videos, and 3D models of objects. Where traditional imaging satellites need the sun's light to capture images, Predasar satellites use radar to make their own light at any time of day, seeing through clouds, weather, and smoke. For decades, this technology was almost exclusively used by governments, but advances in technologies and more affordable access to space have opened the doors for a wide range of global commercial opportunities. With Predasar satellites, we can see anywhere in the world in a matter of minutes. No obstructions, no delays. First responders can pinpoint where help is needed the most. Insurance companies can assess where large-scale damage is most severe. And the military can have unparalleled insight into every move the enemy makes, day or night.
Threat neutralized.
With lives and precious resources on the line, the world can no longer afford to stay in the dark. Terran Orbital Earth Observation Solutions will be there when the world needs us the most.
So yeah, some pretty high quality animations there for sure. Interesting stuff. So that was just a quick overview of the company and what they do. They have two sides of the business, the satellite manufacturing, starting off with those small CubeSats we all know have been growing in popularity. And actually they're now expanding into larger satellites, as well as the radar-based systems from space. But I do have some more data I'd like to show you. I'd like to dive into some of their investor presentations, look at their balance sheet, and a few other things that I like to do as I start researching a new stock. But before we get into that, please hit like and subscribe down below to help out the channel, and drop a comment. Let me know what you think about Terran Orbital. Have you heard of them before? Have you looked into them? Are you a shareholder? Does the video sound interesting to you? Does it sound like something that might have a bright future? Interested to hear what you think, as always. And now let's dive into the company analysis. Okay, so I pulled some of the slides from one of their investor presentations that I thought was the most interesting and might be useful to look at, just to give us some more ideas of their business and how it's growing, how it's doing. So here we have a discussion about the space market experiencing exponential growth. I know we all think that is the case. If you've seen any of my other videos on space companies like Rocket Lab, you know I'm pretty bullish on the space. Yeah, that's a funny way of saying it. Anyway, so what they're saying here is they have a 30% compound annual growth rate. So every year they're growing 30%, and then the next year they're going 30% on that growth and continuing onwards, which can snowball pretty quick. 30% is a pretty impressive growth rate for any company. I have seen some surpass that on a short-term basis, but 30% annual growth is impressive, no doubt about it. These drivers are technological advancements, launch costs and frequency have increased, and then new solutions deliverable in months and millions instead of years and billions as they bring cost of satellites down. Cost of launch has come down. This company doesn't actually launch themselves, just to be clear. They would have to arrange for a launch from another provider such as Rocket Lab, but they do make these satellites. Now they really believe the small sat launches are set to accelerate. So we have a graph here showing the growth from 2018 to 2030 out to 2030. A lot of this is coming from commercial, as well as some government and defense, and some scientific. So 600% growth is quite substantial. Strong business momentum. The backlog has increased by over 200% since the end of 2021. I know I always talk about the backlog with Rocket Lab. I do think it's very important to see the backlog continue to grow, get a sense of where the demand is for your products. So definitely nice to see that their backlog has grown from just 73 million in December of 2021 to 224 million in June of 2022. In terms of notable recent awards, they have microsats for Lockheed Martin. They have a NRO mission. We've talked about the NRO recently because Rocket Lab launched for them out of New Zealand. 90% of the backlog is expected to be converted to revenue by 2023. So that's actually a very important statistic. By the year end of 2023, this 224 million, we should be seeing about 200 million of it turn into revenue. So that can give you an idea of how we're expecting earnings to go over the next couple of years. Backlog conversion is driving revenue, 100% growth revenue year over year for 2022. So yeah, over a double in revenue growth year over year for Q2. Now that just is one quarter. I like to look at annual numbers a bit more because I feel like they give you a bit of a clearer picture. And this just gives you some idea that a lot of their contracts are coming from government, which you can't consider to be good because, the government's always going to pay their bills. They're very reliable. But I do think commercial is where the future lies, and I would like to see that grow. I think there's a lot of potential for larger future growth in the commercial sector. They just want to point out here that there is a potential for recurring revenue. Recurring revenue, as I've mentioned previously, is extremely important for many companies. That's really the holy grail they're shooting for, is not just a one-time purchase. They want to be relied upon to provide services month in, month out, and get recurring revenue back. So how are they doing that? Well, in this case, so they're providing new satellites. That's not really the recurring revenue. They're operating satellites. That can be recurring revenue. And then eventually they're going to be replacing satellites. That's because in terms of if you think about a satellite constellation that needs, say, hundreds of satellites, these satellites only last 3 to 5 years. So every 5 years you have to replace the satellites that are coming down. So that is a constant stream of replacement satellites they are providing to their customers. And of course, operating them can provide additional revenue as well. Hopping over to hypercharts, unfortunately, they were missing a few quarters in here. I think this is just a hypercharts thing as opposed to something where the company didn't have any data or didn't provide it. I can't imagine they had exactly zero revenue and zero operating income for these 2 quarters. But anyway, we can kind of see a bit of a trend here. Now, the operating income is in the negative. This is not a profitable company right now. They are growing, but we're looking at, for the previous Q1 of 2022, a little over negative 30 million in operating income. Pretty much the same for Q2 2022. So that operating income number hasn't really moved too much as of yet, although we are seeing the top line, the revenue growth, continue, and we really need to see that continue. I haven't found yet when they expect to be profitable, but that is a very important piece of information I'll be looking for. This, as I said, is a very initial high-level overview of the company, and I do plan to do more research on them in the future. I did want to take a look at the balance sheet here and the income statement. So this one is the income statement, and we're just looking at the numbers for the past several quarters. So in June of 2021, we had $9 million of revenue. Then we go up to 10, 13, and 21. So that's a pretty substantial revenue growth, really. It's pretty impressive. However, the cost of the revenue is growing as well with it. So as you can see, the cost of the revenue in 2021 was actually lower than what they made, but that is continuing to rise and actually outpacing revenue growth as they're really ramping up, building up their factories and stuff like that. Gross profit, they used to be profitable in 2021, but as they're ramping up future growth, they're spending more and they're currently losing money now. So something to keep an eye on for sure. We do eventually want to see this gross profit number head in the other direction, but it's not uncommon for growth companies to be unprofitable for several years before they achieve, economies of scale and certain milestones and get the returns on their investments. SG&A, selling, general, and administration, jumped up substantially from the end of 2021 to the beginning of 2022. I'd like to see why that is. Perhaps that was when they started their new radar system, but I have to look into that further as well. We're looking at negative 33 million loss for the most recent quarter, as well as the quarter prior to that, and this is over triple what it was back in 2021. So again, we're seeing those losses accelerating, as well as some interest expenses on debt, which is not uncommon, and the net income is negative 32 million in the previous quarter. Trailing 12 months is negative 100 million. So you do want to check out their balance sheet when you see cash burn, because you want to see how much money's in the bank, how long they'll be able to support this, and how long you expect this burn rate to go for. So now let's take a look at the balance sheet. We can see in late 2021, They had about $17 million of cash in the bank, so not a huge number, but they were profitable back then from what I can ascertain. They also had current assets of $40 million in value, non-current assets of $29 million. These could be things like equipment, factories, etc., to bring their total assets up to $69 million. So a very small company, to be sure. We're not talking in the billions. Definitely a smaller player, and I think often with smaller players can come more risk, so just keep that in mind. This might be a riskier play. The amount of cash on the balance sheet jumping up to $76 million from $17 million, and then the burn has started, dropping to $62 million next quarter after that. That's just cash, though. Their total current assets are now sitting at about $100 million, and total assets, which includes non-current assets, are more like $165 million. Current debt is $7,500,000. Not too bad, really, considering I've seen some ratios a lot worse than this out there, as well as accounts payable, accrued liabilities. If you tally up all that, then your total current liabilities is quite a bit higher, $74 million, which is actually exceeding the current cash levels, although not obviously the current total assets. In terms of total non-current liabilities, we're at $143 million, which is getting close to the total assets, but not quite there yet. Now, if you tally up all total liabilities, we're looking at $217 million, so that is a bit higher than current total assets. In terms of tip ranks, there's only 2 analysts currently covering this company. Not too shocking because it's probably a smaller one out there, and smaller companies don't usually get so much coverage. But they are seeing potentially up to 100% upside, although if they did make these forecasts a while back, that may have clouded their judgment. If they made these forecasts back in, say, February, then the stock was already trading at those levels, so then they wouldn't have been forecasting any gains, versus where it is right now, they're forecasting almost a double. The stock is currently trading at about 432, and they're forecasting us to go up to 850. If these returns are realized, that would be a pretty great return for investors. So Terran Orbital is an interesting one to me. I do think the compound annual growth rate is quite impressive. The growth numbers they're showing in terms of revenue are quite impressive, but I really want more data. It's very tough looking at these companies that haven't been public for that long. We don't have, 10 years of previous earnings results to look back on and see the trends, see how the growth is doing. On the other hand, I do find the technology quite interesting. The small sat market is definitely growing quite quickly, and they are moving into larger satellites. The radar stuff I find extremely interesting, especially if they can provide that as a service and run those satellites themselves, as opposed to just making these satellites and selling them to someone else and launching them up and then being done. If you can own these satellites yourself and operate it as a service for various governments or whoever needs to use them, seeing through weather, seeing through smoke and clouds, can be very valuable, and getting this data extremely quickly is extremely important. So the technology is interesting. They don't have launch, which I kind of like to see in terms of the full vertical integration. That's one of the reasons I like Rocket Lab. They also do make some satellites of their own, not really small sats like this though. And I really would like to dive deeper into that radar side of the business and get a better understanding of the business model on that. I do have some concerns about the balance sheet, though. I know some of you guys don't like to hear me talk about cash reserves and balance sheets. I get some comments saying that I'm a little too nervous about these sort of things, maybe, but I just personally think it's important to make sure your company is able to sustain cash burn rates for as long as they can. Dilution is a very real thing when you get new shares issued. The value of your current shares becomes a smaller part of the overall pie. So I am a little concerned by what I see in the financials, just in terms of how fast they're losing money and what their cash reserves are. I'm not ready to invest in this company as of yet, but it's an interesting one to follow for sure, and another space stock I'll be looking at in the coming weeks. I do expect to check out a couple other ones coming up, probably Redwire, some other launchers you may be familiar with. So stay tuned for those videos coming to the channel soon. Thanks for tuning in, guys, and I'll see you next time. Bye.